Hey everyone, Chris Johnson here with Money Morning, and today we're going to be talking about Rivian. The EV manufacturer's stock has slipped below a line in the sand that is usually a pretty great indicator of a 50 to 80% decline over the next 6 to 12 months. So if you're a Rivian bull, you want to pay attention. The warning signs are on the wall. If you're looking for an opportunity to short one of these EV manufacturers in this little bit of a bearish period, Rivian may be the exact stock for you right now. Bull or bear, I've got you covered. We'll take 5 to 10 minutes. We'll go through the chart, the analysts' expectations, and my expectations for the stock. You don't want to miss it. Let's jump into it right now. Okay, so we're talking about Rivian shares today, and that magic line that they crossed is not so magic. It's $10. I'm just going to get it out there right away. $10 is a line in the sand, and usually when most companies cross below this level, it's a sign that they're going to go down to $6 and then $5 and then $2. Take a look at ChargePoint, CHPT, which is a company in the EV charging area. They've done that exact trek. There are many that have come before Rivian, and there are going to be others that follow. But right now, the bulls want to pay attention. I'm trying to save 50 to 80% of what you may have in Rivian, and the stock is already down 60% year to date. Listen up, all right? So what is it about 10 bucks? Let's talk about the psychological aspect first. Then we'll get to the chart and the analysts. So psychologically, as investors, we tend to look for simple signs. Believe it or not, we can look at 20 or 50 different indicators, but the simple ones are usually the ones that get the market's attention and they get them moving. And the chart will show you in a second that investors are moving today as we cross below 10 bucks. What it is about $10? It's just a round number. $10, $100, $1,000. Look at Super Microcomputer Incorporated right now. It hit 1,000 and then reversed, has traded down to 900, and when it gets to 1,000, it's going to be some resistance. Round numbers can be your friend and your enemy, and in this case for Rivian, it's an enemy's number. When we cross below $10, you now go into that single-digit price club. A lot of people look at those stocks and you tend to call them cheap. Some people call them value. Don't get messed up on Rivian. It is not a value. And I'll back up and talk about the fundamentals here for a second and why it's not a value. The EV space has reached a challenging point right now. Sure, for 5 or 10 years, Tesla was able to absolutely rule this space, and the price of the stock showed it. But even Tesla is down 30% year to date as they are seeing the challenges of the EV manufacturing space. Check out the article from Bloomberg. It was from March 12th. Remember that date because it's going to come up in a second with Rivian, but it's from March 12th, and they're actually talking about the difficulties that this industry is seeing. You name it. Higher interest rates. Elon Musk talked about that and how it's affecting loans that people are getting to buy the vehicles, right? You've also got waning demand. The governments are starting to look at the EV space and say, maybe we don't have to put all these restrictions into place. And it's turned into a political hot button for the last couple of months. And it's going to be until November. But nonetheless, it's putting pressure on EV sales. You and I are not going to lots. Look at what GM and Ford did. They said, hey, we're going to put a pause on full EV production, and we're going to go back to hybrids because you and I like to get into our cars and drive 100 miles, or maybe it's 600 or 1,200 miles. We like to have the options. We don't want to be tethered by charging a battery, right? So there's some simple signs. When I do my walk down Main Street, which I talk about quite a bit, the one thing that I do see are more EVs, but I'm not seeing them moving off the showroom. There's a Tesla dealership. It's about 5 miles away from me, and that lot is stacking up. So fundamentally, you're seeing challenges in the EV space. Now, let's lower it and look at Rivian specifically. They actually beat expectations for earning in their last report, and the stock kind of held out there for a little while, but they lowered their forecast. After beating by $54 million in revenue, they said, hey, we think we're going to have some rocky road coming here over the next 3 to 6 to 12 months or so. Analysts haven't adjusted those long-term views of the stock. And that is where the opportunity for the bears lies. And that's where right now all the warning is for the bulls. So if you're a Rivian bull, you want to make sure you listen up. Analyst recommendations. That's a chart you're looking at right now. We've got 50% or 57% rather of the analysts that cover Rivian still have it ranked a buy. 57%. You've got 7% that are saying you should be selling Rivian. Now, go back. It's year-to-date down 60%. And you've got analysts that are digging their heels in saying, hey, the stock is going to turn around. Last quarter could have been what we refer to as a kitchen sink moment, where they just lay everything out of the table. Take notes, because you're going to see that from Boeing at some point in the next 3 to 6 months, where they come out and say, this is everything that's wrong. That's the point where you come out and buy a stock, knowing that all the bad news is out. It hasn't happened with Rivian yet. Even worse, remember that March 12th date that I talked about? You saw Rivian on the same day that Bloomberg was saying there are so many difficulties that are mounting in this space. You saw Rivian come out and announce that they're bringing 3 new models to the market. So when you and I are buying fewer EVs, Rivian has decided to step on the gas as they head towards the wall and see if they can sell us not only more EVs, but new EVs that are going to cost more to produce, the design, everything that goes into getting these models out there. And let me just pause for a second and give you a little bit of insight from me. When I see a Rivian on the street, I think this is one of the better looking EVs. I see myself being able to drive that vehicle, not a Tesla, not any of the Ford Lightnings. I like the Rivian. It's a cool looking product, but cool doesn't get you there right now. And that, again, is one of those products, let's say weaknesses that they're facing. And when you go out and try to say that you're going to take on Tesla's Model Y with one of their new models, what's to take on? The Model Y is already coming down in sales. I just don't see it as something that makes sense, but the analysts still do. Here's a chart of what the analysts are expecting over the next 4 quarters for the company. And we've seen a little bit of a dip in the expectations in terms of earnings per share. And you can see from that chart, we're posting loss after loss after loss. And that comes back to the burn rate for Rivian right now. But the analysts, if you look at it, we've got a little bit of a dip over the next couple of quarters. And then analysts expect this company to start performing well on an earnings basis. So they're still have high expectations for the company, even though the company continues to give them all of these warning signs. And again, the stock after that March 12th announcement rushed from $10 up to $12 and has retraced all of that because people like you and I have figured out, hey, this stock is heading much lower. Let's look at the chart. I've talked about that $10 level ad nauseum already here, but let's look at the effects here. We've got in February, the company trading down to $10. And look at the increase, and you've got earnings that were happening around this time. Everything that was going on with the company in terms of the last breath fundamentally that we're seeing. And you see this rally up into March. Here's your new vehicle announcement where we saw the company come up and test at $12. If you check out moneymorning.com, I actually wrote about this being the last move from $10 to $12, and then you'll see it reverse. So it has followed that pattern exactly, and we bumped along that $10 threshold. But today, notice we break below that $10 and the increase in volume that we're seeing on the shares. And this time around, it's not buying volume that's driving the price higher, it's selling volume. That's because that line in the sand is much more critical right now. Stocks normally test $10. Usually you'll see 1 or 2 different tests of it and support where we bounce up or at least we track sideways. And that's exactly what's happened. But right now, the market is not being fooled by that $10 mark, and you're seeing investors react. That's why you've got large volume coming in on the stock today. So what is next? And I mentioned the analysts and their behavior. When you slip below $10, not only is it a psychological effect, but you're also going to have some mechanics involved. And this is one of the more important parts of what happens over the next 3, 6, even 12 months. Remember those expectations I talked about? Well, analysts are going to have a gut check now that you're trading under $10. And we could see the stock go back up over the next few days. But believe me, the trend right now as we look is a 50-day moving average is in a bearish pattern. We've also seen what we refer to as a death cross, where the 50-day moving average crosses below the 200-day. And now that is in a bearish pattern. And we're below the 20-month moving average for Rivian, which puts it at a long-term bear. So the trend is telling you we're going to the downside. As the analysts start to see us tick down past $9 and then towards $8, we're going to see those expectations and those sell recommendations start to drop. When that happens, we'll start to see some of the activity that we've seen here recently with Tesla play out on Rivian. Analysts will come out, they will lower their target price, and now the target price is between $12 and $13 in terms of Rivian. Instead, we'll see analysts start to move those target prices lower. You only have one analyst right now with a low price of $9, and that's within reach over the next couple of days, let alone 3 to 6 months. As those analysts start to bring those recommendations lower, we'll see the Rivian bulls, those dyed-in-wool bulls, start to realize that, yes, the burn rate of the company is resulting in burn rate in their portfolio, and they will add to the selling pressure. And this continues to go lower and lower and lower, unless it turns into a meme stock, and then maybe you've got a situation where it's a Bed Bath & Beyond. Don't count on that, though, folks. So again, that $10 price level that has been holding. There's another little secret. It's not really a secret, but it's something that has to do with this break today. When we look, these pink lines that I don't talk about that often, they're what we call Bollinger Bands. And whenever they get tight, it tells us that a stock has been going through a consolidation period. And when we break those, they tend to bring more volatility to the market. So let me just underscore not only the warnings of moving below $10, but now the acceleration that we'll see because of that bearish volatility playing out on the stock. What does this all equal for you? The bulls, it's a warning sign. The stock is likely to head to $8, bounce back up to 10, and then head to 6, with an end story that results in a $5 price tag over the next 6 months or so. So if you're right now a Rivian bull, take my warning and save another 50%. As I said, you're already down 60% year to date on the shares, 30% on Tesla, and both of them are going lower. But right now, take this warning. If you have profits, take them off the table. At least protect your portfolio. If you're a Rivian bear, you look at this $10 as an opportunity, as I would any other stock. When American Airlines crossed below $10, I took it as an opportunity to short the stock. Any stock, SoFi, you name it, it crosses below 10, and it is a warning. So my forecast right now is that we hit $8 in the next week or so, and that's 20% obviously from that $10 that we're breaking through today. From there, we'll see a pullback up again, maybe get up around 9, and then you'll start to see the longer term trends playing out to a $5 price tag. And ultimately, I think we end up at $2 on Rivian, where the law of low numbers starts to come into play, and it's just harder to get it any lower than that. Again, look at SoFi. So that is the opportunity for the bears right now. The way you trade this, make sure you get educated before you do so, but take a look at the put options on it. And don't play a put option that expires in a couple weeks, not even a couple months. Pay up, pay for some time premium here, and take advantage of these long-term trends. That's the way I normally do it. If I thought there were much more time on the chart clock for Rivian, I would be buying the January 25 puts right now. But I think it's a little bit shorter. You look at the Septembers or so. Play the trend. Make the trend your friend, even though it's not friendly for Rivian. That's it. Let me sum it up for you. Wrap it up all in one. If you are a Rivian bull, you're looking at a situation where this is an opportunity to cut your losses, or at least cut further losses in the stock, as we've got another 50% to the downside to get to $5. If you're a bear, you look at this as an opportunity to play that long-term trend, and the only way you can really do it is you buy put options on the stock. I don't recommend that people short stock using margin accounts, simply because I've gotten those margin calls before. There's nothing that'll ruin your afternoon or evening like a margin call. Use the options, get the leverage from them as well, and you protect the amount of money that you're putting into those trades by limiting to the premium paying. That's it. Hopefully you've got your warning if you're a Rivian bull. If you're a Rivian bear, take the opportunity. $5 is your target, and I think Rivian does end up at $2. Check out your charge point or SoFi stock if you like to see some other examples of stocks breaking below 10, making a rapid descent. Till next time, I'm Chris Johnson, wishing you the best trading success. Have a great day.